Hey folks, it's Simon here with your Tao Daily for Friday the 21st of February 2025. Happy Friday. S&Ps and NASDAQ were both down a little under 0.5% yesterday, so just retreating back from all-time highs. There's nothing kind of wrong with the trend here. It's just a fairly minor pullback in the scheme of things. If we look at the Qs, again, a little sort of hammer type candle there. The Qs were off nearly 1% intraday, so rallied to close well off their worst levels for the session, potentially using this swing high here as a bit of support. That's provided no scary news comes out over the weekend. Now, the market started off with a sour tone, largely thanks to Walmart. Now, Walmart introduced much lower guidance for revenue and earnings for the coming financial year than the market was expecting. The downgraded outlook comes from several challenges. Consumer spending patterns show increased focus on essential items over luxury goods. Rising credit costs and grocery prices, inflation are affecting consumer behaviour, and recent retail data shows a sharp drop in January sales. Whilst they haven't officially made a change in forecast as a result of trade restrictions, tariffs, implementation of proposed tariffs could impact Walmart's low price strategy. So we had some other retail stocks down in sympathy. You look at things like Target. Target was down about 2%. Costco had a similar decline, about 2.6%. Dollar Tree, which is obviously another discount retailer. Actually, they finished up. Okay, they were down when I looked at them during the day. They actually closed in the green slightly. But the retail sector itself was down and is now testing the 200-day moving average. So retail kind of standing on the tightrope here. Obviously, we'd want to see that hold if the retail sector starts to implode. It's not a great read-through for the real economy. Elsewhere, we're seeing a bit of mean reversion in the 2025 year-to-date best performers. Stocks like Palantir has had a pretty heavy sell-off. It's not just Palantir. CVNA would be another one. AppLoving would be another one. Affirm. Robinhood, Cloudflare, all of these high-flying stocks are down at least 7% in the last 2 days. Now, some of these names could represent some good buy the dip opportunities next week, depending on how the setups evolve. So something I'll be keeping an eye on. Breadth overall was weak. We had 7 sectors close in the red on the 20th. Versus 4 closing in the green. We're not seeing any divergence in the advanced decline line at this stage. It's just mirroring movements in the S&P 500, which is healthy. Friday is always a good day to trim any positions you have any doubts over, particularly at the moment where there's always that potential for news appearing over the weekend that the market may not like when it reopens on a Monday. That's what I got for you today, folks. I hope it helps. I wish you good trading. Have a great weekend.